Right, so I hope everyone is enjoying their morning with a cup of coffee or kopi or breakfast. So do turn on your camera and let me see your pretty and handsome faces too as well. So today we'll talk about the PSA license, which is mandated by MAS and came into effect on the 28th of January 2020, which aims to streamline the process and for the licensing and operation of payment services providers in Singapore. So as we all know, the topic of PSA licensing is very current in the last few months, and today we have three different panelists to share with us their perspectives on this. So first off, it will be an applicant's journey. We have Jonathan Cheong, the Chief Legal and Compliance Officer from DigiFinex, and he will share with us some insights on this journey for the PSA license. And second, it will be more on the KYC and AML perspective. So here we have Megan Lee, the CEO of Rectang, who is also the certified AML specialist, and she will share with us the tips and tricks with regards to the KYC and AML side of things. And lastly, we have Lim Chuan Heng, who is the head of Asia for Privasec Cybersecurity, and he will be sharing with us his experiences with assisting clients on the cybersecurity matters with regards to obtaining the PSA license. All right, so to get the ball rolling, I do understand that DigiFinex is in the process of the PSA license application. So for the benefit of the audience, Jonathan, can you share with us what does your journey look like so far? Jonathan, please. I think I'm muted.
How is this working now? Can you all hear me?
Oh, it's good, yeah.
Okay, fantastic. Hi, I'm Jonathan. I'm the Chief Legal and Compliance Officer for DigiFinex. We're an applicant right now. We have an exemption with MAS for DPT services, and we're in the middle of our application. Needless to say, the application has been very, very daunting. And I have to tell you, it's even more daunting if you're not prepared and you don't really know how an organization or financial institution at that level and standard are supposed to conduct themselves. The regulators will look for a number of things. They will expect you to be very, very prepared. Essentially, if you had to put yourself in the shoes of the regulators, you have probably to think, what can you do to assure the regulators that you are a credible and reliable institution? The regulators are always out there. They do not want to be put in a situation whereby they grant a license to an applicant and then they discover, that the applicant's business is not going to survive not more than 3 years, or maybe might even shut down within, next few months because there are very, very serious operational issues and management cannot sustain the business. So the regulators being very, very thorough, they look at quite a number of things. They look at technology risk management. They look at, especially if you are digital payment token service provider, they'll look at how you safeguard those digital assets and how you ensure a degree of security. They look at a lot of risk management functions, in the event that you do not have the necessary security capabilities to safeguard those digital assets. What will you do in order to safeguard your customers' interests, right? I mean, stand in the shoes of a regulator. They do not want a situation whereby, the financial institution has been audited for a high level of security, but a mishap happens and it turns out that all the customers are not able to reclaim their assets. There are quite a number of other issues. For example, the credibility of the management, the capability of the team. It's a very, very unpredictable environment, and that cryptocurrencies, an industry that I deal in specifically, is very, very unpredictable. And because of the unpredictability, the regulators expect the management to have a level of maturity, industry understanding, technological expertise to be able to foresee and forecast the kind of threats from the different angles that might affect the business or that might shut the business down. There can be issues with legal, there can be issues with customers, there can even be issues with other regulators that you need to look at as well. And so if an organization is at very, very big risk of shutting down, there's a very high chance that the regulators might not admit you into the financial ecosystem, because admitting you in is a risk and might potentially bring disrepute to the financial ecosystem of Singapore.
All right, I see. That's very informative. Megan, I do know that you do have the industry view with regards to this as well. So, Megan, can you share with us like what are the key things that other virtual asset service providers, known as the VASP, should look out for when they're going for the same path, specifically from the AML and KYC perspective?
Yeah, so I think firstly, for all the service providers, right, it's very important to realize that the importance of being KYC and AML compliance, because you'll know that for the cryptocurrencies, it's still the whole industry related to compliance is still in a very early stage, right? Even in Singapore is just last year that MAS started to say, okay, we are going to have this digital payment tokens to be regulated. So firstly, to know the importance is very important. Secondly, it's still also quite challenging for many of the service providers because, for example, they have their existing kind of user experience or for example, the onboarding process, right? They have their own onboarding process, which has been used for a few years. But now the regulator come in say you need to have the non-face-to-face digital onboarding kind of things, right? So it's quite challenging for the service providers that they need to either to build in-house the kind of solutions or they go to the other vendors for that. And also if they go to the vendors for that, they also need to consider the other factors like say outsource possible risk or the kind of technology risk or the data privacy, all these kind of things. So, but the thing is, it's very important, and this is definitely something cannot avoid, right? So because the crypto is like the anonymous, so causing a lot of troubles in related to financial crimes and all the money laundering or terrorist financings, right? But yeah, even though I believe more and more countries in more and more jurisdictions will start to impose the method on the crypto business regarding the KYC and AML. Yeah, so to choose a good solution and to have an internal compliance team who understand the crypto is also very important because we know most of the compliance officers from the traditional financial institutions don't have the background of crypto, right? So it's also a challenge, and a lot of the companies now they're facing the shortage of the people, the compliance specialists in the market. So they also need to understand very well about this part. Yeah.
Yeah, I do agree with you. Like regulations do play a very important part in this as well. Right. So speaking of which, Jonathan, are there any tips or tricks or advice for others who are going to embark on this compliance journey as well? Perhaps you can share with the audience if there's any tips or tricks.
Oh, there is so many tips and tricks. Okay, I guess the starting point, and it's not just with the Singaporean regulators. We see this quite often with the Hong Kong regulators, and we also see this with the American regulators as well for money services business. There are a few key components that the regulators will always look at. I started off with risk management, and risk management is really it's a big scope. You cover a lot of things in risk management. One of the biggest things that you cover is AML, which Megan is quite specialized in, and perhaps you can chime in as well. AML is so important in the grand scheme of things because when they look at financial institutions and when they look at digital assets and digital payment assets, they are very, very concerned, and any regulator in the world is very concerned with the kind of control that the private markets can have on the digital assets to which the regulators themselves are not able to control. And so there is a great deal and emphasis on trying to identify who your clients and who your customers are. For those of you that join, this webinar and don't really know, the global currency trading system has always been cleared in US dollars, and it's built on the back of this very old legacy system called SWIFT. And SWIFT allows the US Treasury or the leader for the Financial Action Task Force with a group of some 39 countries come together to be able to put sanctions on members of the FATF or even non-members of the FATF who have not been compliant to AML KYC regulation, such as freezing offshore US dollars. You don't need to get confused about what offshore US dollars are. It's just basically US dollars that countries use to trade with each other. Whenever there's a settlement between one country and another country, they clear it with this thing called an offshore US dollar. Now, when digital currencies come into play, they sort of, shift the plates on this offshore US dollar, and they make it easy for criminal participants to move money around without being identified and without being traced, because the blockchain only holds address information. It doesn't really hold information about who the sender or the beneficiary is. And so it falls upon the parties or the big parties that are clearing these transactions, like exchange. It falls as a responsibility on them to identify whether there is a potential criminal or risk of criminal proceeds flowing through their financial institution. And if they do not do that, and if they do not identify these individuals, then they are indirectly aiding and abetting the criminal conduct of money laundering. And financial institutions and regulators don't like that, because what will happen is if this industry or the crypto industry is seen to be bringing disrepute, then there's a very high chance that all the regulators across the world will collectively shut cryptocurrencies and digital asset businesses down, which is not in the interest of innovation, because financial ingenuity needs to grow. And so AML becomes forefront and center in a great deal of aspects of operations. And when the regulators look at us, and I'm not just saying MAS, there are other regulators like Offshore, KOSPI, when they look at us, some of the things that they will try and understand are what are the policies and procedures that we put in place to identify the customer and ensure that the customer is who he says he is, and that he has ultimate control over the assets. Megan Lee, she's quite rightly put it is very, very difficult to make these identifications. And I think, moving forward, there's going to have to be a great deal of technological ingenuity that comes in. And she's quite right when she says that, all financial institutions, they're far from equipped, from dealing. You have a lot of compliance officers, right? They'll come in and they'll say, I'd like to look at your identification documents. Now, if you ran a business like ours and you sat back and you thought about it, and your DAU, your daily average user count is approximately about 30 to 40,000 logins, you'd be very, very surprised that you will not have enough manpower to do your AML KYC, which certainly means there has to be some level of technological integration in it. But at the same time, if compliance officers do not understand what they're technologically integrating, the regulators will have no confidence and trust in them. And if the regulators have no confidence and trust in them, the regulators won't grant them a license because they are a risk to the financial ecosystem. Now, there are also many other things that, constitute a risk to the financial ecosystem. One of the things that I mentioned to you earlier was reputation. Reputation is very important. And reputation comes in one of the most fundamental ways. How do you ensure security of digital assets? This is a very big question because it covers many aspects of the business. Sometimes it covers the audit, for example, or the inspection of the blockchain technology that underpins the assets that you are listing or providing to your customers. Do you take an active effort to find out whether or not the security that underpins the blockchain technology that you offer to your customers? Different tokens have different technologies and different tokens have different smart contracts. But do you know enough about the technology and those underpinning smart contracts to, without beyond a reasonable doubt, offer this to your customers with a degree of security that they will not be adversely impacted in the future? And if you do not have the acumen and maturity to even think in this manner, again, the regulators will consider you a risk to the financial ecosystem and potentially bring disrepute and therefore not admit you into the financial ecosystem. So technology, again, becomes another, alongside AML, KYC, becomes forefront and center, right? And there are providers out there that are very important, in making this happen. Perhaps, one of the other panelists, Quan, can chime in later. But ideally speaking, when you focus on these two items, you then have a subcategory of other very important items like transactions monitoring, behavioral monitoring, fraud detection, security technology, internal security procedures, development procedures. There are a whole raft of institutional standards that very, very big companies like banks implement on themselves, that payment service providers like us are also expected to implement, because we deal with the retail market and we have an obligation and a duty to look after the retail customers, because they do not have the level of sophistication and understanding in order to protect themselves. If you think along that line, you will encounter many other questions. Some other questions like risk disclosure, legal relationship. Do you advise them? Do you tell your customers? Do you put them on notice that there is a risk in them entering into this specific legal relationship with you? And what are all those risks? Have you properly advised them? That obligation is on you. It's gone are the times where you think you can run a digital asset or cryptocurrency business without catching eye of the regulator and thinking that you'd have a longevity of your business. That would be very, very wishful thinking. Cryptocurrencies business that do not get the approval of regulators, and this is my forecast, maybe 1-2 years down the road, what's going to happen is this: you're going to see a lot of reputable players getting regulated. And you will find yourself in a position where you are not regulated, and that your customers do not have some way or manner to hold you accountable. When you get regulated, you're holding yourself accountable to numerous standards. And so a very important tip and trick is to identify what those standards are and to know how you're going to deal with those standards. And if you do that correctly, and God bless, you get your license, you can ensure that you'll be a sustainable business, which is exactly what the regulators want.
Yeah, I do agree with that. And that was very informative sharing as well. Thanks for that, Jonathan. So yeah, Q. Trend Heng, we do call him as Q as short form. So Q, as part of the PSA licensing process, I believe there are also other cybersecurity focus. So could you please explain and expand more on that part as well?
So Jonathan actually set up a pretty good segue for me there. Reputation and trust goes hand in hand, and that's a big part of the importance of compliance in this particular case. So with many of the PSA applicants, technology base forms a huge basis for their business. And because of this, there's a large part of the compliance process around the technology risk management. So if we're talking about MAS, there are three key ways which they manage this. The first is the technology risk management guidelines, which was just updated recently. Sorry, the cyber hygiene notices, as well as your technology risk management notice. Now, for your technology risk management guidelines, of course, they're meant to be guidelines. They are not a list of things that you have to be 100% compliant with, simply because there's awareness that any business will have to do what makes sense for themselves. So there's a huge risk element to this on the organization being able to assess and identify the risk they're exposed to and to take the appropriate steps there. So just to take a step back, the TRM was actually revised recently in 2021, and this was done in the midst of a worsening cyber threat environment. You have the WannaCry ransomware attack in 2017, you have the SingHealth data breach in 2018, and the SolarWinds attack in 2020. And along the way, we had seen quite a few third-party vendor data leak incidents, and some of these happened to pretty large organizations, such as some of the local telcos. Now, in the midst of this, there were some updates to the TRM that were made that will affect anyone applying for the PSA license. So the three key areas of focus and changes that we see from the latest set of guidelines. One is the role and responsibilities of the board of directors and the senior management. with regard specifically to their competency in managing cybersecurity risk. So there's this new, this was always there actually, but now the changes to the guidelines actually enforce this in the organization's ability to guarantee that there's someone in senior management who can accurately identify the risk and to be able to address this risk effectively. There's also emphasis on governance and risk management of third-party service providers. Specifically, additional emphasis on assessment of the third-party suitability in connecting to your APIs or your application programming interface and getting access to these APIs. So the focus around this is very timely, especially if the spate of third-party vendors being used as an attack vector. So even for nation-state related incidents you've seen in the past 5 years or so, in some cases, you have malicious attackers, for example, replacing replacing code in a third-party vendor's repository. And when a third party pushes all this out as updates, the customers are affected. And in some cases, the attacks are a bit more direct. Your data, while you are the controller of your own data, you have a third party processing on your behalf. And if the data is breached from the third party's point of view, even though technically it might not be directly your fault, but your customers might not see it as such. And lastly, there's also a requirement, or not requirement, guideline to establish a robust process to be able to identify, monitor, detect, and share cyber threats within the financial ecosystem. So for the more established organizations, they probably do have this connection set up already. There are some local organizations for specific industries around threat sharing. And it's important that these new participants in the financial ecosystem are also part of this data sharing environment. Now, for those doing development, there's also some changes, of course, with how we do development work because of technology changes and how people are shifting to the cloud over the last decade. So there's more emphasis and more guidance around software development practices, around the standards you use in secure coding, your code review, and application security testing. So in the background, there's been this continuous shift for developers moving from a waterfall model towards a more agile development model. And there's this thing can be a whole presentation by itself. But there's a lot of emphasis and importance on pushing the ability to perform security assurance downwards, not just at the point where before your code is being deployed, or not at the point where your security team is involved, but even at the point where your product manager is assessing the requirements for the product, and at the point where your developers are writing code for the product. If not, you will not have the benefits. You will not be able to enjoy the benefits of agile life cycle, faster development pace, along with your ensuring ability to develop secure products. In addition to this, there's also a lot of reliance on third-party and open source software codes these days. I don't think there's any recent product in the last few years that will be able to say there's no open source software codes involved. In this case, it's also important that these codes are subject to review and testing before you integrate them. Now, along with the shift towards the agile software development methodology, your DevSecOps management is also important on how you have adequate security measures and enforce segregation of duties for development, testing, and release functions, especially when everything is so tightly coupled together now. So that's for the TRM. In addition to this, I think everyone here, if you have looked up MAS requirements, you're probably familiar with the cyber hygiene notice. So these are essentially a collection of baseline security controls, things like your multi-factor authentication, having security standards, doing your malware scanning, and so on. So I won't go too deep into that. But what we have noticed is there are some points of emphasis when we talked about the risk management that these organizations should be concerned about. And two things that are often emphasized. One is penetration testing. I think this is probably quite a familiar term to everyone, but the question is still asked whenever there's a compliance review. Second, there's a new emphasis on your data lifecycle, as well as how you perform DLP, data loss prevention. So, I mean, with the not directly related to PSA, but with the increased emphasis on how PI is being managed in parallel, In general, data lifecycle management is getting more important now. Your ability to identify and map where your sensitive data lies, where it flows through, what kind of controls and protections around these, how long do you retain the data, how do you dispose of them, for example, and what kind of third parties are involved. Now, whenever we go into an environment to do assessment around this to prepare a client for an audit, we find that oftentimes this is one of the items that are missed. And of course, your regulators and auditors are also aware of this fact. So it's also a point of focus. And of course, because we are talking about DLP, there's also an emphasis on your ability to detect mishandling and misuse of data. Now, and lastly, for those that have what MAS classifies as critical systems, you have the technology risk management notice. This one is more focused on availability of your critical systems as well as the ability to respond and recover. So I won't go too much into that, but I think this would the 4 items I've mentioned form a pretty good baseline for the understanding of what the regulators are looking out for. Yep. And Megan, back to you.
Well, thanks, Q, for sharing with us all this information as well. Actually, for this part, I believe that Megan, you're quite familiar with this as well with regards to the MAS TRM and gap assessment. So just want to check with you, what do you foresee are the key challenges and what are the advice you would give to companies that are also applying for the PSA license in terms of the KYC and AML side of things?
Yeah. So I think that you already have shared a lot about the tips and the tricks of applying for the PSA license and also regarding the technology risk management. But one thing I want to highlight is for the crypto business or the VASPs, one of the most important thing is the travel rule. How to comply with the travel rule is one of the biggest challenge for a lot of applicants at this moment. So travel rule was given by FATF in 2019, right? The guideline, see the crypto business also need to comply with that. So the travel rule is to exchange the information of the originator and beneficiary of the transactions. So as Jonathan just mentioned, that in the financial world, we have the SWIFT system for all the information exchange, but in crypto, still not yet. Right, so there's some protocols at this moment in the market like TRISA, OpenVSP, and all this, right? And also some tech providers are trying to develop their own travel rule solutions. Of course, this is the starting point to be compliant with travel rules. So also in Redten, we're also working on this to serve our customers. But the thing is. Yeah, the travel rule is not only about the solution, it's also about the whole system, right? For example, so in technical level, it can be solved. So maybe some companies they implement the first this protocol, and some other companies they implement the other protocol. So still end of the day, they need a system that ideally all the companies can exchange the information.
I might chime in if you may allow me to interject at this moment.
Yeah.
So for the benefit of everybody who don't know what the travel rule is, there is this regulatory requirement across all the participating FATF jurisdictions that goes something along the lines of if you are going to remit money out of your financial institution into another payment gateway service provider or another financial institution, one of the obligations you're expected to have is to pass along the UBO information to the receiving financial institution. And more than often, you face this problem where the receiving party is not willing to receive that information because for whatever reason, they do not wish to comply with the travel rule requirements. And then you, as a very compliant organization trying to obtain your license, comes into this very, very difficult problem of, well, what do I do? My client wants to get, or my customer wants to get their monies out of my platform, remit it to another platform, but the other platform is not willing to receive the beneficial owner information. Basically, they don't want to play ball on anti-money laundering. So the really big and complex issue here is the number of participants. When Megan refers to a protocol, it is a network or a group of participants inside a protocol, basically a group who are willing to exchange information based on a certain encryption standard. Because when you pass along information, it has to be safe, it is personal data, it has to be secure. So there are some requirements around this. And because the requirements start to pile and they become very difficult. Remember, I had mentioned if you run a business like ours, you probably have a DAU of approximately 30,000, in a day, or 40,000 in a day. And it becomes very, very cumbersome to manually package personal data information and send it across to a less than willing party. And you might have one protocol, and that willing party might have another protocol, and then you have the big problem of, well, what if our protocols, don't commensurate with each other and we can't, transfer information? Then the customer suffers the brunt out of it. But it's the obligation of the financial institution to discover how. Sorry, Megan, I didn't mean to interject, but please go on.
It's okay. I think the thing you share is more clear about the travel rule, right? So this is one of the challenge. So, but the thing is, the travel rule, right? This is a kind of challenge as long as there are enough organizations or platforms are willing to participate. This can be resolved, right? But there are some other challenge that is technically very hard to resolve. Let's say the unhosted wallet. Right? How do they regulate, or how to keep the KYC AML for the unhosted wallet? This is very, very challenging problems, right? So, but FinCEN already proposed a new rule for this unhosted wallet that they want the business to identify the counterparty wherever the dealing with an unhosted wallet for transaction over 3,000, right? But and also they want the platforms or the business to file a currency transaction report for all the transaction involved in the unhosted wallet for the transaction greater than 10,000 US dollars. But it's just it's still a requirement that haven't put in place. So yeah, it related to this, right? One thing is maybe the regulators say your platform, you are not allowed to deal with the unhosted wallet. It's possible, right? But then from the service provider itself, from that point of view, it's really something they don't want to see, or they don't want to follow, maybe because that will affect a lot of their users, right? So this is the second challenge. And the last challenge I would like to say is about the DeFi and NFT platforms, right? So the DeFi and NFT platforms, all this is decentralized. So in terms of the regulations, AML, KYC, the first thing the regulator has is who to regulate, right? So, and because of many of the platforms, they are running in a very decentralized way. There's no centralized intermediate to be responsible for some of the platforms. In that sense, who should be the regulator? The US, Singapore, or who? Right? This is a problem. So the second thing is on the DeFi platforms, the users can only by connecting the wallet to do all the transactions, and everything is on the smart contract. So in that sense, if the platforms or the creators of this platform doesn't want to implement any method of KYC ML, so they still can make it happen, right? So it's very challenging. So in terms of this, it is the technical challenge. So I mean, it's not only the technical challenge, but the nature of the technology itself make it like this. So in Redtech, we're also working on this to do to help giving a solution on the KYC for this. So it can be in a smart contract, it can be in a blockchain way to impose on the DeFi platforms to do the KYC AML. Yeah.
I see. Okay, I do apologize for some glitch with regards to the chatbot part, but we have actually unmute you. So let's say if you have any queries or anything, you can just put at the chat box there, or you can just raise your hand. And yeah, so I do see that there's a question from Gerald, which we'll address it later. And I believe John or Megan can actually address the question as well. It's a simple question there. Yeah, but I'll just move on to the main content for today first. So, oh, that was very informative information as well. But John, how do DigiFinex ensure a high level of operational resilience, governance, and sustainability for its customers as well?
Okay, yeah. So the starting point, as I mentioned, is risk management, and we adopt a highly parallel mindset with the regulators. You become resilient by being able to identify the kinds of risks that will critically impact your business. And if you do not have the capability to identify this risk, you are not competent. The same would apply for us, the same would apply for any applicant. Why? Because if you cannot identify the risk, you cannot come up with a solution with solving the risk, and that risk will be critical and it will end your business one day. And when it does, your customers will be left out and dry, and you will bring disrepute to the financial ecosystem. So the starting point for a resilient business is the ability to identify risk. Now, there are many kinds of risk, and it's impossible to cover it, during this session. And I guess I only have 5 minutes on this response. It's very difficult to cover in this session the different ways and methodologies that you use to identify risk. But if I have something to share with all the participants today, I think the most important starting point is you are a financial institution, or you're going to be making an application as a financial institution. What kind of processes do you have in place, particularly technologically wise, to safeguard your customers' assets, to ensure that even at a time of compromise, you have some way to recover those assets? It cannot be an excuse that, I have a great degree of, technological resilience, but in the event of a compromise, I have no way to compensate my customers. You stand in the shoes of the regulators and you stand in the shoes of a customer. Would this be the answer that you want to hear? And do you think the regulator will allow a participant like that into the financial ecosystem? Likely not. Okay, so the starting point really is to have operational resiliency. You need to have a very intelligent and high-powered management that, number one, not only understands the business well, but understands the risk of the business, and to be able to identify future threats to the business and come up with policies and procedures to deal with them. And so there are multiple expertise that are required in it. And sometimes the problem is getting the view of one person, because management is not the whole world, right? You might have, I have a CTO, who is formerly from Tencent, and, he's very, very smart, very, very intelligent. But they might not be the be-all and end-all opinion and for all of you legal and compliance officers like me, you understand my position. Some of the things, even you don't know, you're expected to understand, because compliance is more than just AML, KYC. Compliance is also requiring everybody to comply with the corporate governance of the company, and corporate governance touches every department. It touches technology, it touches human resource. You have guidance rules. You as management and you as a legal and compliance officer, you write down rules and regulations, SOP, standard operating procedures, to tell how they should operate. And when they deviate from that SOP, there is a risk and something bad is going to happen. So you need a way to identify those risks. All right. But sometimes you alone, you're not sufficient for identifying this risk. You will need to rely on external experts to come in, audit, and make an assessment of your current posture and your current capabilities. And then you get that satisfaction as a legal and compliance officer and say, even the external auditor says, my tech guy has been doing it right. Then you bring this back to the board and say, we are in the right direction. We have identified all the risks, and an expert has come in to sit on us. But the problem with this is also at the same time identifying who is an expert. Because if you bring in somebody to make an assessment of your senior management and they do not have the expertise to do so, then you run the risk of doing a very, very, very bad job in risk management. I see some questions coming up. I'm not sure if I should take them later.
Yeah.
Okay, I'll
address all
probably
these
take them
questions
later because I'm
later.
running out. Yeah, because I'm running out a little bit of time. I'll take those questions later. In a nutshell, just remember this principle. Number one, the ability to be able to identify risks, be able to document them down, and be able to hold your entire management and your executive to those standards that you have documented down. And you will be expected to present that to the regulators as well, because if you can show that you can identify, you prove that you have the industry knowledge to do so, then you must prove that you have the competencies to meet the standards that you set for yourself. I guess my time is up, so I will briefly end my response here.
Thanks, Jonathan. Well, Q, I do understand that you have worked with some exchanges before with their PSA licensing. So would you be able to share more about this without disclosing their information?
Yep, sure. I can share a little on that. But to add on a bit to what Jonathan has mentioned, from a regulatory point of view, there are two types of controls that they will be looking at. The first set of controls would be what we consider baseline controls. So these would be things that have been deemed the minimum for organization of your type, and the risk a typical organization in the business that you're doing would face. So in MES, we can see this come in the form of your cyber hygiene notice, which are very basic items. These are items around simple things like multi-factor authentication, having perimeter protection, that means firewalls and so on. Now, beyond that, it goes back to risk management simply because you don't know what you don't know. For threats that you face out there, at least from the cyber perspective, you have threats that will see you as a target of opportunity, as well as threats that are in a way persistent threats, a competitor or someone that's identified you as a target and they try everything to get to you. The minimum level of protection identified will essentially help you manage from being a target of opportunity. But in addition to that, in a business-friendly environment, regulators are not going to say, are going to be a bit conservative on what they consider the minimum. In other words, that's also why that's also why MES release guidelines instead of putting everything as a notice or everything as a requirement. And the whole point of this is your organization. And the prerequisite to having this freedom to decide in a way, to assess the risk and decide for yourself whether or not you want to do it, is that you have a good risk management system. And I'm not a operations or financial expert. I'm a cybersecurity guy. But from what I understand, the same underlying concept extends to other aspects of your business. In other words, you have the baseline and then you have your risk management procedures that will be able to tailor the other controls required for what you're doing. And I hope that helps to explain a little. It's also a little related to the question asked there. Now, in with regards to the experience we have with helping some of these exchanges and younger organizations applying for PSA license, I think there's often a shock in the breadth of what these guidelines are require you to consider, simply because you don't know what you don't know again. And because of this breadth, organizations are often not prepared to deal with the questions that are coming in from the regulator. A good first step would be simply to do a gap analysis to what the guidelines are and where you currently stand. And I think there is also this balance between being able to work in an agile and fast manner versus putting in these security controls. Like I mentioned, at the end of the day, it's up to your risk management, internal risk management, and how much you're willing to stomach this risk, as well as the understanding of the auditors and regulators externally, what they expect and what they're considered conventional. So some of this you can't really tell just from the wording of it. You will have to ask someone. Megan?
Yes, I do agree with you in terms of, maybe trying like a MASTR MGAP assessment first to see where's your cybersecurity posture and where you stand at the current stage too. So move on to the Q&A session, and you addressed some of the questions that's on the chat box. All right, so for the first question from Gerald, I would like Jonathan or Megan to actually address it with regards to the travel rule.
Let me chime in on that one. So the first question is the travel rule contention with the industry been resolved by now? The answer is no. It's no because of the technology. It's no because of the limited amount of information that the blockchain can transfer. Until the blockchain is prepared to have a bigger data allocation size, it will never be something that's resolved on-chain. And so if you don't resolve it on-chain, you have to find an off-chain solution for it, which is the very, very difficult and cumbersome part because you need the participants to come in. One of the solutions I found very, very ingenious, and we apply it as well in our exchanges. When we deal with an unhosted wallet, we try and ask ourselves the question, what sort of methodologies we can impose to demonstrate effective control over the unhosted wallet address. The idea is beneficial control. Why do you have to do something like that? You actually have to go down to the customer level and tell the customer, I'm going to send you two, 0.000001 BTC transaction, and I'm going to send you another 0.00002 BTC transaction, and I want you to send them back to me inversed. And if you do that and they are capable of doing that, then they have effectively demonstrated beneficial control over the address. Whether or not they did it themselves or whether or not they instructed a third party, at the very least, they have demonstrated beneficial control. And if they have demonstrated beneficial control, you can rely on that beneficial control. Now, there are many different other solutions out there, but this is a very cheap and efficient solution if you do not have one already implemented. I will defer the rest of the discussion to Megan Lee. Megan, you are on mute.
You're on mute.
Sorry, I was mute. Okay, so I think this is a very I can't say, okay, it's one of the way to deal with the unhosted wallet, right? So, and on the other side, it's also, I think we need to look what kind of, if it's possible to have more detailed requirements from the regulators in related to the unhosted wallet, right? Because we're not sure whether we need to report the kind of transactions to unhosted wallet at this moment. So yeah, the travel rule is something I still believe it has a long way to go. And but right now I already see some solutions that they are trying to have another layer to help exchange the information from the different networks. That is also possible from the industry level. Yeah, so I saw there's another, sorry, is there another question? Oh yeah, so regarding the trust and the limit resource to as a startup to be compliant. This is actually a very interesting question because I believe we all know that during the process of applying for the license or any kind of real compliance solutions or in other jurisdictions, the cost is really there. And the cost on compliance is not an issue only for the crypto business, even for the traditional financial institutions, right? They also think the cost of compliance is one of the challenge to the executives of these financial institutions. So that's why there's a lot of there's more and more regulatory technologies coming up, right? So because once to the largest extent that we can automate the process, so it will be saving the cost for the companies especially the startups. So I believe this is something that the whole industry is evolving. So and more better solution will come up. But still, we all understand that from the compliance point of view, it's almost not. It's not so easy to automate the whole process, right? To give a very simple example that you still need people to go to solve the false positive, right? Even though we can use certain AI technology to reduce the false positive, but still need manual review and check, right? So this is just one of the examples, and they're not even to mention about your internal procedures, your policies, and also to have someone to know what you don't know. Right? These are all the things that still need the people to come in and to manually work on. So if from the startup point of view, so I'm not sure whether I should share this kind of opinion. Okay, so let's say for example, if I'm a startup in the blockchain space or crypto space, right? Try to be fast before the regulators come into the DeFi or the NFT, right? So this is only purely from the business point of view. So it's still you still need to have the chance to have the time to try your business model, to try to build up, to have some accumulation, some capital or whatever for the future that you can do your better compliance, these kind of things.
I'm going to jump in here, and
Yes,
I do want to give Gerald my advice as well. To be honest, having a startup with only limited resource, you're in the right place. The digital asset business is very, very young, to say the least, and so regulators are very, very forthcoming with the use of technology. Very, very traditional and conventional financial institutions pour a lot of money on human resources. But if you are able to streamline all of those manual processes, and turn them into a very technological format, and you have certified ways and audited ways to ensure that these processes cannot be junked. That means they cannot be manipulated or altered externally without your control and access. Then you have a very, very cost-efficient operational structure. Just to think about one of the items that Megan mentioned earlier, clearing of false positives. For a very, very long time, clearing of false positives has been a very manual process. There are new AI learning algorithms. In fact, there are some very, very simple algorithms that even you can implement at your policy level. For example, you can clear a false positive if there is not plus minus more than one difference in a character for a person's name, plus minus 3 or more proof of jurisdictions, for example, the place of birth and the citizenship, and comparing it with the end result to find out how far the match is, and doing a weighted average difference of not more than 5%. And so just using very, very simple algorithms like this, you will cut out a lot of the cost that comes with running a business. The idea is to understand the regulatory requirements well, and to meet those regulatory requirements using technology and not using manual process. But to help you as a startup, and my position as well, previously also being in a startup, it's best that you set out all your governance policies and procedures first, and then you test them in a sandbox. This exercise is not expensive because you don't need the manpower to do it. And once you test them out in a sandbox, you have a very, very good idea whether or not those processes, those algorithms that you have put in place and run them through a machine, whether they make sense or not. And if they don't, you just keep repeating that process until you have a perfect set of algorithms running your policies and procedures.
Yep. I think what you say is true as well, and I agree with Megan that speed is important for startups. So for Gerald, I hope that answered your questions. And let's say if you have any more queries with regards to this aspect of things, you can just email us at info@privasec.com. So I just want to check for the rest of the attendees. Please raise your hand if you're unable to type on the chat box, because I believe there's some glitch for some attendees as well. All right, so for our next question, for YL, can Jonathan briefly share the kind of timelines and roadmaps for PSA license granting that his firm is going through? And will MAS be exercising stringent monitoring even during exemption period?
Okay, I'm going to answer the first. So there are two questions. I'll break it down. The first question is what is the kind of timelines and the kind of roadmaps? There is a very specific roadmap that I have to say, I have to praise the regulators for this, because they started off with enthusiasm and then they started to calibrate the roadmap. They started to change the kind of deliverables and expectations. And it's good because it sort of filters out the kind of businesses that will do well because they know what they're doing and the businesses that don't. And for the longest time, we used to think, at least I used to think when I started on this application, I thought it would last for 6 months. I was prepared to go in for 6 months. It's almost a year and a half and we still haven't gotten our license yet. All right, we're still in the state of exemption. And you probably heard the news of, there are applicants that have gotten digital payment token license, for example, FOMO Pay. You have heard of other DPT exchanges that have been granted in principle licenses. And so the regulators, I think, are starting to come to a close on the kind of applicants and the kind of criteria that they expect. And this roadmap will start to iron out and will be a uniform application across. This is what I foresee, don't take my word for it. But I think it's going to be a uniform application across all the applicants within the next 6 months to a year. And so you can expect that if you make an application now, given MAS have already very, very clear in principle approval requirements for the existing applicants, that they would implement the same level and degree of standard and due diligence for newer applicants. Will MAS be exercising stringent monitoring even during the exemption period? The answer is yes. As an exemptee, and these are the regulations and these are the statutory requirements. As an exemptee, it does not mean you are exempt from all the regulatory and compliance requirements. You still have to comply with all the regulatory and compliance requirements. And that's everything: TRM, AML, KYC, disclosure notices, the whole raft. There's so many, we won't be able to cover it within this Q&A. And are they stringent? Yes, they will. They will ask you, they will quiz you, and they will inspect, and they will expect you to be able to answer and meet the compliance standards that you set out for. Put yourself in their shoes. If you cannot even show them a degree of compliance during your exemption period, what makes you think you can prove to them that you will meet your compliance standards when you are granted a license? Right. So they will continue to stringently monitor you even during the exemption period. And even if they don't, you are expected by regulatory standards to comply with them. That's my response. I think we have a few other questions. Megan, do you want to take over?
Yeah, I saw Justin's question at the side of the chat box. With regards to the questions, would it be okay if we were to email you the answers, because we're actually running over time, a couple of minutes over time. So perhaps what we can do is we can actually email you the answers, and let's say if anyone would like to ask us anything, please feel free to email us at info@privasec.com. And I do just want to know any quick last words from the panelists or anything.
I do want to take that last question from Justin, and then so
Sure.
I'll clear this question and we'll wait for. So I believe we can afford the time. So yes, I did speak about requiring companies to have the necessary safeguards in place to protect consumers' assets. Licensed digital asset custody providers in Singapore. Now, when you need to understand that when you do a DPT business, it is inevitable that you will hold custody over your customers' digital assets. You will. You have effective control, and because you have effective control, you essentially have custody. And it doesn't make sense that you go out and tell the regulators, I am going to outsource the custody of my digital assets to a third party. Then the regulators have no reason to give you a license. They might as well give, the guy that you have outsourced it to a license. What's the point of giving you a license, right? And so it is up to you to impress upon the regulators using technological explanations and standards, how you will be able to meet a high degree of security for your customers' assets. And you have to apply a great degree of risk management and a great degree of logical understanding of the business and its risk to demonstrate to the regulators you are capable of safely safeguarding. Now, what about the situation whereby your knowledge, the regulators' knowledge, and actually the whole industry knowledge never anticipated a risk beyond that? Well, what will you do as management? If you ask me, the answer is go and get insurance, right? If you did not even think about insurance, then you clearly did not have the level of competency needed to safeguard your customers' assets. You must go out there, think about other ways to safeguard your own customers' assets. In the event, you must have reserve and insurances in the event either you or your digital payment custody provider. So if you're using a third-party wallet provider like Fireblocks or Coinbase wallet, which I sincerely do not recommend, you must have your own technology and understand, because if you use a third party and you don't even understand the third party's technology, you are a risk to the financial ecosystem. If I was a regulator, I see no reason why you should be admitted in. So you need to understand the technology well. And if after understanding the technology, you have to go over and above and acquire additional assurances to the regulator and to the community at large, that even if you tank one day and you get hacked and you lose all your customers' assets, you still have a capability to repay them either through number one, reserves, or insurance. Okay, so these are just some of the ways that you can use. I see we have quite a few.
Yes, there are quite a few questions over here, and I see that Prashant raised his hand as well. So would anyone on the panel like to take the questions from Prashant and Gerald?
I'm sorry, I do not see I see another question from
Gerald.
From Gerald, yes. DBX and ADX not custody providers license. Okay, there are, so if you want to know who custody service providers are, you can actually go on the MAS Financial Institutions directory. You just do a quick Google search, you will find it. And you can look up both payment service providers and capital market license holders and CMSL. Some of them have digital payment services, and you can take a look at the kind of regulated activities that they are able to provide, and you can engage them. But having somebody who is licensed, as I mentioned, is not a reasonable excuse to outsource such a critical function of your business, right? And if you do, you must have very good reasons, and you must also have very, very good risk management in place to ensure, because if you do this, the whole world will start to outsource to them. And when the whole world outsources to them, we call this a concentration of risk. So if they tank, everybody goes down. And so you have to, of course, you exercise a clear, logical mind and say, all right, if I do this, there must be very good reasons why I'm doing this, either because, I don't have the technological capability or knowledge to do it, and I want to take a shot at outsourcing it to someone else. And after that, the kind of risk management processes I have in place to mitigate the risk if they tank, or if they, they go into a default, or they default on their position as an outsourced service provider.
See. All right, thanks, John. All right, so we have another question from Prashant. Prashant, are you able to?
Yeah, I can quickly ask Jonathan and Megan. This is for both of you. Thanks for the session. Considering we are going over time, I think it's quite popular, as you can say. I had questions on two folds, and it's a bit convoluted. From an assessment point of view, I guess there are a lot of organizations now coming up with smart contract audits and things as such. Just as an industry point of view, the legalities involved and things as such. First question is, how do you see market accepting independent audits on exchanges and companies who are going through this to establish some kind of a platform for blockchain? And the second question, maybe it's for Megan, where I guess KML policies and all that have been there for a while now, but because this is quite a niche market, traditional approach is not going to work typically in such matters or this industry. How do you see the industry adopting to this swiftly, but also keeping in mind all the required procedures that they have to follow?
I think I'll answer the first question first, and then I'll touch a little bit on the second. For the first question, you asked, how open is the industry to internal audit or external audit? I don't think it's a question of whether or not they're open. I think it's inevitable and I think it's necessary. Already you see the regulators implementing it at an application stage. They ask you to go in and explain to them what your processes are in doing, say, for example, technological gap analysis. They ask you how you are conducting certain kind of internal audit functions. Risk management is always forefront and center, as I mentioned at the start. If you cannot identify your risk, you have a big problem. And so, Prashant, when you speak about audit is a necessary requirement, in my view, for every financial institution. It is also an expectation of the regulators, not just in Singapore, in Hong Kong, and also in Australia as well. And sorry, just give me a minute. Megan, if you can please continue.
Sorry, Megan, I think you're muted.
Sorry, can you repeat your second question? I didn't really get it very clear.
All good there, Megan. So I was just saying, from like this KML policies and all have been in the industry for a while, right? But
yes,
the blockchain industry hasn't been there for a while. It's quite new in the industry, if you like. I mean, depends who you ask. Maybe it may not be new for everyone. How do you see the traditional approach to KYC and other processes that you spoke about going to get swiftly adopted to the crypto or blockchain industry?
Yeah, so for, as you mentioned, that the KYC AML has been for quite a long time, right? So, but into the context of blockchain and cryptocurrency, something changed, and some of the old method can now solve the problems in the decentralized kind of network with the anonymous kind of features of the technology. So we do believe that to use the certain kind to take use of the blockchain technology itself and the smart contracts will be a trend to resolve the problems, and also it's a trend of the new regulatory technology in the crypto context. So, but in order to do that, right, we need the whole industry to work on this. Not only the companies, not only the service providers who are willing to take the new method to implement the KYC ML the solutions, and also we need a company, maybe some companies like us, the red tech companies, right, who continue to think of the new method to give the new solutions to the industry. And more importantly, it is the regulators. Whether the regulators accept the kind of new technology or new method to dealing with the KYC ML issues, that is also a thing. So in the terms of this, I think Singapore is doing quite well compared to many other countries, right? At least the regulators, they have quite high tolerance to the new innovative methodologies, and all they are willing to, they are open to listen to the different kind of solutions that the applicants or the companies propose to them. So I think this is something quite interesting, and even for the the kind of problems that we think we cannot resolve at this moment. For example, the DeFi and the unhosted wallet. I don't think there will be technologies even for the non-fungible token, the NFT. For example, that would be one of the method to do a KYC or the identity check, right? So one person's identity or the KYC information can be converted to an NFT, right? So this token can be used or by the different platforms, and they can have the certain level of control of the private key to either to only view the information or to get the result of the information, right? To be as the result of the KYC check. But the thing is, again, about the regulators, about the regulations, whether they accept this kind of new solutions, because if in that way is still not to that level of the kind of ongoing monitoring, right? So what they can do, maybe every 6 months or every 3 months to do a review or of this person's profile as the kind of the ongoing kind of monitoring. But is this something accept or not? That's also another question.
Yeah, sounds like introduction of artificial intelligence and machine learning.
Yes, that's also something maybe can help.
Yeah. Thank you
All
so
right.
much.
Thank you.
Thanks, Megan. Thanks, Jonathan. Thanks, Prashant, for asking, and all the other guests as well. So we're running a couple of minutes over time, and I do want to thank everyone for joining. So we really do appreciate it. And now we have tried to fit as much information into the session as we can. So moving forward, if you'd like to continue the discussion or do you have any further queries, please feel free to add us on LinkedIn or email us at info@privasec.com, and we will actually answer your queries ASAP. So thanks, everyone, and enjoy the rest of the day.
Thank you.
Thank you. Bye-bye.
Bye.
Thank you. Bye.